What the housing market will look like by the end of summer, according to experts. Hello everybody, here is an article from Yahoo Finance. I will have a link to this article down in the description below. You are not going to want to miss out. Where are we going to be at the end of summer? Let's listen to what this expert has to say. Traditionally, spring is real estate season, but buyers across the country were waiting for summer to finally see a return to normal inventory levels, normal competition for most important, normal prices. We're definitely not seeing normal prices, guys. Inventory is sort of getting up now. We're going back to somewhat normal, decent levels. We're still super low with the inventory, although there are some cities now showing higher inventory like Las Vegas, Boise, and Austin. But in general, the inventory is still fairly low across the country, which is definitely why prices are staying kind of high. But again, prices are coming down. They're coming down slowly, but they are coming down. And as far as normal competition, we're finally out of a seller's market and we're finally into a buyer's market. There are more houses sitting on the lot, sitting on the market longer, which is making, buyers basically have more to choose from, which is making the housing market more competitive. We're still not seeing a great buyer's market right now. It's still kind of like there's a few more buyers than sellers as a whole, but it is changing. Inventory is creeping up. And remember, what we need to bring the prices of homes down is more inventory. And that we're starting to finally see the cracks. Here, let's keep reading. As it turns out, a return to normal is probably far off, but cracks are starting to emerge in the seller's market that has defined the real estate industry throughout the pandemic period. The experts in the trenches are seeing clear indicators that relief might be on the way, but it will come. Will it come in time for summer? No, I definitely don't see anything changing in the summer. I see personally big changes coming January, February, in the winter months, after possibly we see a slowdown in consumer spending during the holiday season. And then when, stores basically report their earnings, they might be a little bit lower, and that might really spook the markets. And I think that's when we're going to start seeing huge cracks in the housing market. Right now we're in a huge bubble, and it's just unaffordable for most people to buy a house, and that cannot be. We're at the highest levels of affordability rate that we haven't seen these levels since 1989. Basically, it is the most expensive to buy a house right now compared to how much people make in the community, and that can't sustain itself. That's a clearer indicator that we're in a huge housing bubble. And when that happens, eventually it will pop, guys. It will pop. You just have to be patient. Now, if we keep reading, heading back to sanity, right? Hopefully we're heading back to sanity. Remember, guys, for the stock market, for the housing market to crash, the economy is going to crash. It's not going to be a pretty sight. But if prices don't fall, then we're going to be in deeper trouble, because again, all roads lead to the same place, which is basically we need to get back to a predictable and stable housing market. That's the only way things will get back to normal. Now, if we look right here, the housing market will not be as expensive as it was last year, but buyers will have some leverage around this time around. Yes, absolutely. Now that homes are sitting longer out in the market, now that we're in a buyer's market, so basically, we have a little bit more, we have more leverage. We don't have to, put money above asking price, which is a common trend that we saw during the pandemic, because there was just so few supply out there, and we had so many more buyers, so it created unbelievable bidding wars. Well, the bidding wars are over. People are saying we hit the peak, we hit the top. Now with Fed rates going up, it has definitely cooled off the market, and now finally buyers can have a normal situation. It's nice to be able to buy a house. If a house is selling for $500,000, it's nice to be able to offer $460 and kind of negotiate. You might walk in there and say, hey, the floors are cracked, or this needs work and that needs work, and then it's a negotiation, right? You get a little bit of a deal, the seller gives in a little bit because they know that their house needs work and whatnot. So that's how deals go through. But in the pandemic, people were basically waiving all the inspection fees, appraisal fees. They just wanted to get into the house. So the sellers were like, great, like selling a house in one day. Well, it's unheard of, and it's not good for the housing market as a whole. Now, finally, thank God, we're starting to see those changes. Now, if we keep reading, it says, in my opinion, here, let me highlight it. In my opinion, home values will appreciate more than historical average. That would mean that housing market should expect to see an increase of 5 to 7%, generally speaking, despite rates increases. Higher interest rates will eventually slow down the housing market, but it will take a while before you begin to see any effects of that rising rates will have on housing. Since there is much of a massive shortage in housing currently available, it will take a while for higher rates to affect pricing and for the inventory to get back to historical levels. So again, right now, as many of you guys know, the housing starts are, the new constructions are like basically halted, because the price of land is too expensive, the price of materials are too expensive, and the price of workers are too expensive. Their salaries are too expensive. So now builders don't want to build, because if it costs them too much to build a house and the market crashes, they don't want to be holding the bag on a house and basically lose $100,000 on that exchange. They don't want to do that, so they stopped all production. Now we have we're having a supply issue. And when you have a supply issue, basically it's going to keep the prices up. And with inflation being where it is, inflation is also basically keeping the prices up of everything. So when are we going to see cracks? We're going to see cracks when the economy starts to have some layoffs, when when companies report lower earnings, and they have to, when the stock market starts seeing bigger layoffs, the stock market starts freaking out, and the stock market just starts to drop. Then people start putting their houses on the market quicker. Then you could have some foreclosures. Again, whatever it takes to basically have that inventory is what's going to make the prices drop. But if we're not building new houses, that is going to keep the prices high for the time being, which, we really need new housing right now. That's really the key. But again, unless we get inflation under control, nobody, no construction company is going to want to jump into that space right now. So it's all kind of crazy here. Let's finish out the article with these two quotes right here. So an important thing that is currently happening is that only the highly affluent, or those who have saved up for years, are the ones able to buy a home. I believe this trend is something that will continue to play out in the next few months. So like I said, guys, the best situation that you could put yourself in right now is saving for a huge down payment. You want to put as much money down as possible. Now, I always tell people that you should at least put 20% down in a house, but I know that it's very, very difficult to save up 20%. You can save up as low as like 3.5%, which is fine. The only problem is when you buy a house, putting less than 20%, you're gonna have to pay PMI. Now, PMI is not a big deal. It's better than not owning a home, and you could always refinance once you hit that 20%. You could refinance out of the PMI. It's just a special insurance to protect the bank, right? To make sure that if you can't make the mortgage payment, that PMI insurance would jump in and help you out for a few months. But as a whole, right now it's probably not the best time to buy, because you don't want to buy at the top of the market and suddenly in 6 months, your home value drops 10%, 20, 30%. And now the people that are buying your neighbors that are buying a house, at that time are basically paying a lot less than you are for the same house. So right now is probably a good time to hold. We're gonna have to play it out and see how it all comes together. Now, I'm gonna go ahead and finish this video. I wanna just say a big thank you to everybody who's been watching my videos and supporting my channel. Thank you guys so much. If you're new to my videos, don't forget to smash that subscribe button and go ahead and like and leave a comment. Again, thank you guys so much for watching. I love you guys, and I'll see you on the next video.